Very good morning, everyone. So most of the students are afraid with that big question, that 15 marks question that is compulsory in our examinations. So we have already done some practice sessions before also, and today I'll be discussing some more questions so that your concepts can get more strong. You'll be able to understand how you are going to present in your examinations. And if you have seen my earlier lectures also regarding these practice sessions, you must have observed that we'll not just do these questions from the bird's eye view, but we actually get into it. You have to solve with me whenever I'll ask you to stop the video. You can pause the video right there, and you have to attempt the paper with this particular question, and then you can cross check your answer with my solution. Correct? So I'm starting with the total income questions today. This is from your study material. If you come to page number 9.31, the chapter is income tax liability computation and optimization. So we have the questions at the end of the chapter. So I'll be discussing few questions today, that too total income questions. And you understand the total income question is majorly PGBP, but it contains some provisions of other head also, deductions also, sometimes TDS as well. So it's a mixed question of all the things. And you should be able to see, I always recommend my students that this total income question is bit time consuming. So I would suggest you to please keep this question for the end. First, attempt other parts of your paper, your MCQs, your other questions, that optional questions. First, attempt that particular part, and then at last come to this question. But please make sure that you should maintain your speed from the very beginning, right? You have to maintain your speed from the very beginning. So let's start with question number 6 today. This is page number 9.31. How you should proceed with this total income question. The first thing first, before reading this question, you should know what the examiner requires from you, right? So first of all, come to the last line so that you can, while reading the question, so you should have this in mind that what is the requirement of the examiner, correct? So this question says, from the above, compute the total income of Dr. Srimati Niranjana for the assessment year 24-25 under the default tax regime. Okay, so we have to calculate the total income. Should we calculate the tax liability also? The answer is no, because the examiner wants just the total income. So you have to compute the total income only under the default tax regime. Okay, and optional tax regime also as per the normal provisions of the Income Tax Act. So this examiner requires to calculate the total income from us, and that too from both, by using both the regime, normal regime as well as the default tax regime. Correct? So now we will start with the question. So if you'll read this, it says, Dr. Niranjana, she's a doctor, okay, a resident individual, age 60 years. 60 years means senior citizen, is running a clinic in Surat. So she has her professional income, that is PGBP income, okay, and she is senior citizen. Her income and expenditure account for the year ending 31st March 2024 is as under. So she has provided her income and expenditure account. P&L account or income and expenditure account, one and the same thing. So let's understand what it is there in her income and expenditure account. Debit side is all expenditure, credit side is all income. So we have to see if there is any expenditure which should not be allowed, and if she has debited that expense, so we are going to add it back. Correct? So first, in fact, your steps should be, while computing your PGBP income, you start with your net profit. If it is profit, then you start with a positive amount. If it is loss, then you start with a negative amount, right? So while computing PGBP, you should always start with your net profit or net loss, as the case may be. Then you should look at your expenses side. What are the expenses which are debited in the P&L account? Are they correct expenses which should be allowed? Tell me how you will consider whether that expense is allowed or not. So we understand we have section from section 30 to 37. So if any expense is covered under these sections, so it is generally allowed. It is allowed. But if that expense is not covered under these particular sections, then that expense is not allowed. Or if we have any specific section which disallows that particular expense, then also it is not allowed. So our second step should be to read each and every expense what is debited in the P&L account. So let's see what are the expenses which is debited in this P&L, in this income and expenditure account. Okay. First is medicine consumed. See, for a doctor who is running their clinic, so medicine consumed is a normal, their business, their professional expense. So it should be allowed. And although you don't have to quote the section over here, but still if you ask me then that in which section it is allowed, so we have general deduction under section 37 it is allowed, because there is no specific section for medicine consumed from section 30 to 36. We don't have any section, but it is a revenue expense, it is for business and profession, right? It is not prohibited by law, so it is a general deduction allowed under section 37. Getting it? Right. Second is staff salary, again an allowable expense. Clinic consumables, almost same like medicine consumed. Clinic, what are clinic consumables? Although we don't have to go in detail, but still in a doctor's clinic, cotton, gloves, etc. These are all consumables, right? So this is also an allowable expense. If something is mentioned in additional condition, then we will see it specifically. Otherwise, on the prima facie, on the face of it, it's I'm finding that these are good to go expenses, no problem with them. Rent paid. If it's a rent paid for the building which you are using in your business and profession, so this should be allowed under section 30. If it is not for building but for something else like machine, then also it is allowed under section 37. So rent paid is allowed, but yes, it should be for your business. This particular thing for which you are paying rent should be used in your business and profession. If you are paying rent for your personal purpose or any other purpose, not for business and profession, then it is not allowed. Getting it? Okay. So on the prima facie it is looking, it should be allowed. Administrative expenses again, no problem as such, allowable expenses. Amount paid to Scientific Research Association approved under section 35. So she has paid a scientific research expense. She has done a contribution towards scientific research and she has contributed to an approved institution. Is it allowed or not? First of all, tell me, is it in-house research or outside research? This is outside research, right? In-house research is something which you do for your own business or profession, but this is outside research. So is outside research allowed or not? So it depends upon the regime which we are following. See, if we are following default tax regime, then outside research is not allowed. Under default tax regime, only in-house research is allowed, outside research is not allowed. But if the assessee is following optional tax regime, then both outside as well as in-house is allowed. Correct? So, because in this question, we have to calculate the total income by using both the regimes. So, when we will be doing optional tax regime, then we will make it allow. So, we are going to allow it. But if it is default tax regime, then we are not going to allow this expense. Got it? Then we have a net profit. Okay. While computing your PGBP, net profit should be your starting point. In case it would have been loss, then it should have been your starting point. So you can simply show that figure as a negative figure. That's it. No difference as such. Okay. Now on the income side, please understand this. See, if the assessee has credited certain incomes in his P&L account or income and expenditure account, same thing. So if assessee has credited certain income and if they belong to section 28, 28 is charging section of PGBP, that is, it's a business income. Or if it is covered under section 41, that is deemed PGBP. So if there is any income which we found that it is covered under PGBP, either under section 28 or 41, then we are okay with it. Why? Because assessee has credited their business or professional income on their P&L account, in their income and expenditure account. We are okay with it. We have no issues. But the problem arises when if there is any income which should not, which does not belong to PGBP, then we have to take it out from there. So if any income which does not belong to PGBP, we have to subtract it. We have to take it away from here while computing PGBP. And where we should take them? We should take them to their respective heads. Correct. So if it is some other head income, IFOS, capital gain, house property, salary, then we have to take them. We will take it out from here, and then we have to take them to their respective heads. Second thing, let's say assessee has credited any income which should not be in PGBP, and in fact it should not be in any of the head. Why? Because it is an exempt income. In other words, assessee has considered exempt income and they have credited over here, then we have to take it out from here. And where we will take it, in which head we will take it? Nowhere, because that is an exempt income, right? This is what you have to do in income side. So let's see what are the types of income which she has in fact credited in her P&L account, income and expenditure account. I'm again saying P&L account, but income and expenditure P&L account, same thing. Okay, so this is consultation and medical charges. See, consultation and medical charges for a doctor is PGBP, right? So we have no issues with it. It should be there in the credit side. So we have no problem with it. Unless and until something is mentioned in additional information, then we have to do that particular thing. Otherwise, we are okay with it. By income tax refund. Okay, so this is one of the examiner's favorite adjustment. They always keep on giving this particular adjustment by income tax refund. Tell me which income in which head we should take income tax refund. Nowhere. Please understand first. Income tax is not an expense. Whenever you pay income tax, it is not an allowable expense, right? It is not allowed. And whenever we will receive this income tax back, that is income tax refund, it will not be our income also. That is an exempt income. So income tax refund is not an income. Correct? First of all. Second, if you receive interest on income tax refund, if you receive interest on that amount, then that interest portion will become your IFOS. Only that interest portion will become your IFOS. So let's see what it is. So they are telling us that it is income tax refund. Principal amount is 5,000. So 5,000 is not our income, not taxable. But interest is 450. So this is 5450 total. Anyways, we have to take it out from here because it is not PGBP. We will take it out from here 5450 entirely. And we will take 450 under IFOS. Got it? Third, dividend from UTI. Unit Trust of India. So it is income from some Unit Trust of India, that is a kind of mutual fund. So this is taxable under IFOS, correct? So we will take it out from here and we will take it to IFOS. Getting it? Okay. Here it is written gross. What does this gross means? That is before TDS. So it's good enough that they have written gross because we always consider income on our gross basis, not on net basis. If this would have been net, so first we have to compute the gross amount, right? This is simple mathematics. Let's say on dividend, we know that 10% TDS should be deducted, right? So if this would have been written net amount and we understand that 10% TDS would have been deducted, so this amount would have been equal to 90%. So you have to do mathematics while computing your IFOS income. You have to take it at the gross level. So what you would have done, 10,500 divided by 90 into 100, this will take this figure to a gross level, right? But here we don't have to do such calculation. Why? Because it is already gross. Anyways, whatever is written over here, take it away, take it out from PGBP because this is not PGBP, this is IFOS. And in IFOS, please put 10,500 because this is gross level which is given to us. Winning from game show on TV, net amount. See, gross was also given, now net is also given. How much is credited? First, see how much is credited, 35,000. Anyway, this is not PGBP, this is IFOS. So, subtract 35,000. Whatever is credited in P&L account, subtract that, right? So, you have to subtract 35,000 from here while computing your PGBP. And take it to IFOS. Now, tell me, in under IFOS, should you write this amount as 35,000 or at gross amount? At gross amount, correct? So this is what I was telling you here also. So how much is the TDS which was deducted? 15,000. So if you will, you have to take the amount which is before TDS. So how much is the before TDS amount? 50,000, correct? So anyways, while computing your PGBP, whatever is credited, subtract that. 35,000 you have to subtract. But when you will take it to IFOS, please keep the figure as 50,000, 50, correct? At the gross amount. Rent is 27,000. See, is it a PGBP income? Now she's a doctor, she's having her clinic, so rent is not a PGBP income. If this rent is of building, nothing is mentioned here as of now, might be something is mentioned in additional information. if this rent is related to building, so this rent should go in under house property computation, right? And if this rent belongs to some rent of machine and so, it should go in IFRS. So anyways, this is not PGBP. If it is building, if it is related to building, then we have to compute our house property income. If it is for other assets, then it should go in IFRS, right? Then that we will see. But if this is building, then it should go in house property. So how much? This is one of the mistake which student generally commits. Here, they say that house property income is 27,000. No, house property income is not 27,000. You have to compute the house property income. See, here it is mentioned rent. If I'm assuming that if it is rent of building, then this should become GAV. If expected rent information, standard rent, municipal rental value, fair rental value is not mentioned, then it should be considered as GAV, gross annual value. And you understand how you compute your house property income. From GAV, we subtract municipal taxes paid, then we get NAV, net annual value. Then after that, there is a standard deduction, 30% of NAV. If you remember the section number, it is 24 small a, right? So under 24A, it is 30% of NAV. And if there is any interest on this building, then we have 24B also. This is how you compute your house property income. So if this would have been written straight away, house property income, then you don't have to do any computation. You can simply put this is our house property income. But if they have given like this is rent of building, then you have to compute your house property income. And it's a very small calculation. You can easily do that. Okay. So we have read the entire income and expenditure account. Let's read the information also. It says rent paid includes. So they are talking about rent paid. That is this amount, 90,000 rupees. So they say rent paid includes 30,000 paid by check, okay, towards rent for her residential house. It's not for their business or profession, but it is a personal expense. So you understand personal expenses are not allowed. So out of this 90,000, you understand 30,000 should not be allowed. So I'm writing it over here that 30,000 should be disallowed out of this, right? Okay. Then the second point says clinic equipments on 1/4/2023, that is the opening WDV is 5 lakh, and on 7th of December 2024 acquired by check rupees 2 lakh, right? See, if they have written it by check, let's say if they have not written it by check, we will assume that it should be a banking transaction. But in case if this would have been written that they have acquired this clinic equipment of 2 lakh rupees by way of cash, then we understand if we acquire any asset for more than and if we are paying more than 10,000 rupees, then it should not be regarded as a capital expenditure also, right? And we know that there is another section 40A3 which says that if you are making payment then 10,000 for more than 10,000 rupees for any payment for revenue expenses also, then also it is not considered, it is not allowed, correct? So there they have mentioned that it is by way of check also. And if you look at the date, this is 7th of December 2023. Second thing, if the question does not mention the date of put to use, then what you should assume? If the question does not mention the date of put to use, because you understand they are talking about depreciation over there, got it? So if because and put to use is something which is important to compute to calculate the depreciation. If the question is silent, then we always assume that the date on which it is acquired, it is put to use. You can also write an assumption over here. It is assumed that it is the acquisition date and the put to use date are same, correct? So first of all, tell me, is there any depreciation in their expenditure side? The answer is no. There was no depreciation over here. So we have to compute the depreciation. And you understand that this is clinic equipment like plant machinery. And what is the general depreciation rate on plant machinery? 15%, right? So this is the opening value 5 lakh rupees. Additions during the year is 2 lakh rupees. So total it is 7 lakh. So should we apply 15% on entire 7 lakh? No. We have to see that out of the 7 lakh, 2 lakh was acquired during the year and it's used from December onwards, 7th December. So if I roughly calculate the number of days, December, January, February, March, it will not be more than 180 days, right? It is less than 180 days. So you understand, on this we will calculate half depreciation, and on this amount we will calculate full depreciation, and the depreciation rate is 15%. So full would be 15% on 5 lakh, and on 2 lakh it would be half, that is 7.5%. Easy. Okay. Third point. Rent received relates to residential house property. Okay, now they have mentioned that this rent is related to residential house property. Okay. Rent received relates to residential house property situated at Surat. So she has a house in Surat which she has given it on rent, and 27,000 is the rent which is received. And they have also mentioned gross annual value 27,000. Okay. The municipal tax is 2,000. So how you will calculate your house property income? Take GAV as 27,000. From GAV we understand we will deduct municipal taxes paid 2,000. So it will become 25,000 will become NAV. And from NAV you have to give a deduction of 24A first. That is standard deduction, 30% of NAV. 30% will become 7,500. So it will become, I believe, how much? 18,000. 17,500 would become your house property. Yes, if there is any deduction of 24B also, then also you have to consider if there is any interest on this house. Okay, but they have mentioned, if you read it properly, they have mentioned that municipal tax of 2,000 paid in December 2023, although also, they have paid also, good enough, has been included in administrative expenses. Very important. What they are saying, 2,000, it's a house property expense and you have taken it in administrative expenses. It is not a PGBP expense, correct? So in under administrative expenses, we have 255, but out of it, 2,000 is a municipal tax, and that too which is related to your house property income. So you have to add back 2,000 rupees because that is not a PGBP expense, right? So you will calculate your house property and you will do that particular adjustment also. Fourth point. She received salary of rupees 7,500 per month. She received salary of rupees 7,500 per month from Full Cure Hospital, which has not been included in consultation and medical charges. So she has income from PGBP. She has income from IFO, as we have seen some dividend and some winning also. She has income from house property. And now she has income from salary also. So she received salary of 7,500 per month from a hospital. Salary hit, which has not been included in consultation and medical charges. So we have consultation and medical charges and it does not include the salary amount. Very good. It should not be there. Why? Because it is not PGBP. So that is not an issue. It is not included. So it is good enough that it is not included. Even if it would have been included over here, then we would have subtracted it. Why? Because it belongs to some other head. Correct. So it is not included. Very nice. But you have to consider this as your salary income, 7,500 per month. And I'm presuming that she has worked for the entire 12 months. So 7,500 into 12, how much it is? 90,000 rupees, right? So 90,000 will become gross salary. And you understand, you will also provide, you will give standard deduction under section 16. How much it would be? 90,000 or 50,000, whichever is good, 50,000 rupees. This would be the standard deduction. Then 40,000 will become her salary income also. So she has salary head also, house property head also, PGBP and IFO also. Let's find if there is capital gain also. Okay, because that is the only one poor head which is left. Is it poor? No. Fifth point. Okay, tell me whether standard deduction is available under a default regime also. Yes, standard deduction is available under both the regimes. But other deduction under section 16, that is tax on employment or entertainment allowance deduction, that is allowable only under option scheme. That is not allowed under default scheme. Only standard deduction is there in both the schemes. Fifth point. Dr. Niranjana availed a loan of 550 from a bank for higher education of her daughter. Okay, they are referring to section 80E, education loan interest. But 80 is not available under default. It is available only under optional scheme. She repaid principal of rupees 1 lakh and the interest of 55,000 during the previous year 23-24. So in our year, she has repaid 1 lakh as the principal amount and 55,000 as the interest amount. We are only concerned with the interest amount, right? Because 80E gives deduction only with respect to interest, not with respect to principal. So we are concerned only with 55,000. We don't have to do anything of 1 lakh rupees. Correct? Can we get the deduction of, some student might be confused because sir, we have learned there is a principal repayment deduction also under 80C. So can we give 1 lakh deduction under 80C? No, that is regarding the housing loan, right? It was not regarding education loan also. That was regarding your residential property. It is not for other properties or other particular loans, etc. So this is not under 80C. Only 80E will be there of rupees 55,000. That too under optional scheme, not under default scheme. On default scheme, we have very minimum deductions under chapter 6A. We have 80 CCD2. We have 8 CCD2 is pension scheme, employer contribution. We have 80 CCH2, that is regarding Agniveer scheme, right? Employer contribution. And then we have 80 JJAA. For intermediate level, we have only 3 deduction under the default tax regime, right? No other deduction is available of chapter 6A under default tax regime apart from these 3. JJAA is regarding the new workmen, where assessee is required to get their accounts audited and they recruit some additional workmen. So whatever the amount of salary which they pay to them, then 30% of that salary is allowable as deduction under 80 JJAA. I believe your concepts are getting revised also. Correct? Okay. She paid 1 lakh as tuition fees, not in the nature of development fees or donation. It was not donation, it was not development fees, it's a purely tuition fees to the university for full-time education of her daughter. So we understand that for 2 children, for maximum 2 children, you can claim a deduction for tuition fees for full-time education. And here it is just 1 child, 1 daughter. 1 lakh rupees is allowed under section 80C. And the maximum deduction which we can claim under 80C is 1,50,000. In fact, 80C, 80CCC and 80CCD1 combined limit is 1,50,000 rupees. 7th, but 80C, is it available under default? No, only under optional regime. An amount of 28,000 has also been paid by check on 27th March 2024 for her medical insurance premium. So during this previous year, she has paid medical insurance premium, health insurance premium. So is it allowed? Yes, sir. We have under optional scheme, it is allowed, not under default scheme. We have section 80D. 80D is regarding medical insurance, right? So there are 2 things. First is you can pay for yourself, your spouse, or for your dependent children 25,000 rupees. In case the payment is made for senior citizen, then 25,000 will become 50,000. So in this case, she is a senior citizen, correct? We have find out that she is a senior citizen. So in that case, up to 50,000 is allowed. So if she is paying 28,000, so no issue. 28,000 would be allowed, right? And the second part of 80D is regarding the parents. 25,000 are allowed, and if they are senior citizen, then 50,000 is allowed. Okay, so we have deductions under section 80E also, 80C also, and 80D also. But these 3 deductions will not be available under default. They will be available only under optional scheme. And now we have to compute the total income by using both the methods. Now, this is something which is important. So how you will proceed? Some students can go this way also, that they can while doing while answering this, your presentation could be like this also, that you can make 2 columns, one for default tax regime and other for optional tax regime, and you can solve it. But actually this is it consumes a bit more time. Why? Because you have to write each and every figure again and again. You have to duplicate that figure. So that is a bit time consuming. So what I'll suggest to you is, first compute the total income by using any one of the method. By using any one of the method, either default or optional, you can compute it by using default method first, and then take the gross total income of default in your optional scheme. Take that gross total income which you have computed under default in your calculation of optional scheme, and then make a little adjustments over there. So whatever is the difference between default and optional in your question, you can make some adjustment. There would be only 2 or 3 adjustments, not more than that. Let's say in this case, it was only related to scientific research. So first, if you have calculated GTI as per default tax regime, you have not allowed that scientific research outside research expense. But when you will be taking it into your optional scheme, then you can just make an adjustment of your scientific research expense also, right? So this is how you will be able to save your time, and your presentation also will also look good. So now let's start with this question. Okay, so you can pause the video right here. You just do whatever as of now you have understood. Just make your own presentation, and then you can cross check your answer with my solution. So you must have observed how I did this question. So first you have to write the answer. Although I have mentioned the page number also, that is just for your reference. You have to write the answer first on the top of the sheet, and always start your new answer with the fresh page. Correct? So this is computation of total income of Dr. Niranjana as per default tax regime. So first I have solved it by using the default tax regime. Income, she has income from four heads. She doesn't have income from capital gains. So we have started with salary. So under salary, there was a very less calculation. So we can do it right away over here. We know it is not required to make note of each and every head. But yes, generally for PGBP, or in fact, if it would have been capital gain, so generally they take some time, they take some space. So it's better to make a separate note for PGBP or for capital gain. But for salary, if there is nothing much in salary, just 1 or 2 points are there. And specifically in house property is a very small calculation, right? And even for IFOS, 2 or 3 points would be there. So you can solve it over in your main presentation. only. But for PGBP specifically, please make a separate note for that. So here, because this way your presentation also will look very much professional, and you will be able to get good marks also. Why? Because examiner will be impressed by your presentation. See, so first we have calculated income under the head salary. It was 90,000 minus standard deduction, 40,000 is the income. House property, we can easily calculate, just a very small calculation, 2 or 3 lines. So this is house property. Then for PGBP, we have made a note, right? So we have made a note, separate note for PGBP. On the second page, see, on the first page, it was default tax regime. On the second page, I have mentioned optional tax regime, and then I have made the notes over here. So this is PGBP note, and we have already discussed all these things. So this is 450 is your PGBP income. Put that figure over here in your PGBP. IFS, we have 3 types of income: interest on income tax refund, only the interest on income tax refund, not the entire refund, because that contains 5,000 also, that should not be taxable. Got it? Dividend from UTI, game show winning, and that too at a gross level, not at the net amount, not 35,000. It should be at whatever the TDS which was deducted, please add it back also. Show it at a gross level. So this is 60,950. So this is our GTI. And from GTI, chapter 6A deduction, because we have only 80C, 80D, 80E, and all these 3 deductions are not available under default tax regime. So I have written it over here, not allowed. So this will become our total income only, and examiner is just concerned with the total income. We are not supposed to calculate the tax in this particular question. Now, see, our GTI was, our gross total income was 5,72,900. We can simply take this GTI while showing our optional tax regime. So I have shown GTI as computed in a default scheme 572,900, so that I can save so many of my steps, because I don't have to tell the examiner again and again, because there is no point in duplicating the answer, correct? So just write your GTI, whatever it was as per the default tax regime, and make certain adjustments if there is any difference in your calculation. So there is only one difference, which is related to outside research, scientific research expenses, correct? So it was not allowed under default tax regime, but it is allowed under optional tax regime. So we'll subtract it simply. So we have subtracted outside research expense 150. Otherwise, there is no difference in salary. There was no difference in salary. There was no difference in house property. There was no difference in IFS, only PGBP, that 150 amount related to outside scientific research. So we have shown that adjustment over here. This is good enough. You can do this in your examination, right? Actually, examiner wants that you should work smartly. So this is my GTI, and then we will show the deductions also, because they are available under optional tax regime, 80C, 80D, and 80E. So after deduction, our total income comes to 2,39,900 rupees. Correct. Also one more thing, because assessee is paying their rent also. So we have one more deduction of 80GG. If assessee is paying rent for their residential house, then we can give the deduction under section 80GG under optional scheme. But one of the condition of 80GG is that the place where you are paying rent, you should not have your own house, your spouse house, or your minor children house, or the HUF to whom you belong to, they should not have a house in the same city. So here in this case, the assessee was paying rent in Surat, correct, in Gujarat, in Surat, and they also have a house which was being let out, that too in Surat. So we cannot give 80GG over here. So I have mentioned that particular thing by way of a note, that 80GG deduction of rent base is not allowed over here, because why? Assessee has another house which is let out in the same city. If they have the house, then they cannot claim deduction under section 80GG. Correct. So I've mentioned it over here. This is your PGBP note, and this is your final answer for question number 6. Got it? So let's start with question number 7 now. Before starting with question number 7, what we should do? We should simply come to that particular point where are the requirements which examiner is asking from us. So what are the requirements of examiner? It says compute the total income and tax payable by Mr. Purvi for assessment year 24-25. So we have to compute the total income also and tax payable also. in a most beneficial manner. What does that mean? It means that we have to again compute the income both under default scheme as well as optional scheme, and then we have to advise to the assessee that what should be the most beneficial, what should be the most optimum scheme for you, right? So here also we have to calculate by using both the methods, and that too total income also and the tax payable also. Please tell me what is the difference between tax liability and tax payable. Do you know the difference between? I believe that you know the difference between tax liability and tax payable. What is tax liability and what is tax payable? See, it's very simple. Whenever you calculate your total income, whenever you calculate the total income for any year, you have to calculate a tax on that income. How much is the tax on that particular income? That becomes your tax liability, right? So that becomes your tax liability. Let's say your total income is, let's say your total income is 10 lakh. Your tax liability comes to rupees. Let's say, for example, I'm putting a very random figure. Let's say your tax liability comes to rupees 90,000 rupees. Correct? If you have paid anything out of this tax liability by way of, let's say, by way of advance tax, or your TDS was deducted or your TCS was collected, then you have to take a credit of that. So whatever the amount of TDS or whatever the amount of TCS which has been deducted or collected, let's say 20,000 rupees has been deducted by way of TDS or TCS has been collected, or let's say you have paid the advance tax also. You have paid the advance tax also of rupees 30,000. So your tax payable now, your final liability, because although your liability was 90,000, but you have already paid 20 and 30. 30 you have paid by way of advance tax, 20,000 it's already been paid by others by TDS or TCS. So 50,000 you have already paid to the government. So you have to pay the remaining 40,000. This is known as tax payable. So I believe now you have the fair idea of the difference between tax liability and tax payable. Tell me whether in this question the examiner is asking us where it is here. Examiner is asking us the tax payable, right? So we have to calculate the tax liability first and then the tax payable. So if any TDS, TCS has been deducted or collected, we have to show that also in our solution. If there is any advance tax which is paid, we have to show that as well. Got it? Okay. Now we can read this from starting. Question number 7. We know that we need to calculate total income and tax payable, both the scheme. Miss Purvi, age 55 years, is a chartered accountant in practice. Again, she is a professional, so she is not a senior citizen, right? She maintains her accounts on cash basis. A very important point over here. See, if the question is silent, they do not tell you that by which method the assessee is maintaining their accounts. We always presume that they are maintaining their accounts on accrual basis. Accrual basis also known by different names, due basis or mercantile system of accounting. So if nothing is mentioned in the question, if the question is silent, we always assume it is on mercantile basis. But in case like this, if it is specifically mentioned that assessee is maintaining their books of accounts on cash basis, then we have to allow all our expenses on cash basis. We have to take all our income on cash basis, right? On payment basis or on receipt basis, right? So here it is mentioned that all your expenses should be taken on cash basis now. All your income should be considered on your receipt basis now. Her income and expenditure account for the year ended 31st March 2024 read as follows. Okay, so again income and expenditure account is provided to us. So let's read the expenses side first. Salary to staff, prima facie seems to be okay with us, allowed. Stipend to article clerk, same like salary and wages. Stipend is also that nature. So you can pay stipend to your article assistants, no issues, both are allowed. Incentive to article assistants. Can you pay incentives to your article assistant? The answer is yes. It is a kind of bonus which you are paying. So it is also a business expense, no issues. We can pay salary, we can pay stipend, we can pay incentives to our article assistants also, no issues at all. Office rent allowed. You understand that For if you are using any building for your business or profession, then it is also for office, then also it is allowed under section 30 also, although you don't have to mention 30 anywhere, but you should know that we have an idea that it is allowed under section 30. Okay. Printing and stationery, allowable expense, no issues. It is not covered under section 30 to 36, but 37 allows printing and stationery. It's a revenue expense. It's a business expense, not prohibited by law, right? It's not personal. So it should be allowed. Meeting, seminar and conference, no issue. Seems to be an allowable expense. Purchase of car, is it allowed? No, it's a capital expenditure. You should claim depreciation on it. So if you have purchased a car for 80,000 rupees, it is not an allowable expense. It is not an allowable expense. Why? Car is official use, understand, but it is a capital expenditure. Claim depreciation under section 32, right? You don't have to allow this 80,000. Instead, you should claim depreciation on it, right? Tell me, what is the depreciation on these motor vehicles? What is the rate of the depreciation? Sir, 15%. Very good. It is 15%. But there are certain vehicles, please remember that also. There are certain vehicles, certain cars also, where the depreciation rate is 30%. What's the difference between these two? Sir, we know that if the assessee is engaged in transportation business, if the assessee is engaged in the hiring of these cars, a taxi business, then in that case, because that car depreciates so much, that is the reason we give higher rate of depreciation, 30%, because that car is used in higher business. Your businesses of such a nature that you always gives your cars on rent, your vehicles on rent, then it is 30%. Otherwise, if you are using your car in normal business, if you are having your profession, if you are having your normal business, not of renting of car, not of hiring of cars and all, then the depreciation rate would be normal 15%, right? So here it would be 15%. Okay. One more thing. Here they have not mentioned, although they might mention in additional information, but if they have not mentioned it over here, if they doesn't give this information, that what is the date of put to use. So might be it generally we assume that if the date of put to use is not mentioned, then the purchase date becomes put to use date. Generally it's a general assumption that if put to use date is not mentioned, then purchase date becomes the put to use date. They have also not mentioned when it was purchased. Is it less than 180 days or more than 180 days, right? 180 days or more. So if it is not mentioned, then we can take our assumption over here. So we can take it as used for more than 180 days, then we can claim full depreciation of 15%. Yes, you might take another alternative assumption also, that it has been used for less than 180 days, then you can claim half depreciation also. It's your wish. But generally, I will recommend, if you are taking an assumption, take it full. Take it full. Right. Repairs, maintenance and petrol of the car, that is a revenue expense. That is no issue. It is allowed. Right. Car is a machine and repairs expenses are allowed, although you don't have to write it, but repairs of machine, right? Repairs of machine, repairs of furniture, insurance of machine, insurance of furniture. We have section 31 in that. Although you don't have to do it in here also, you don't have to mention it, but you should know. Traveling expenses. See, if it is regarding your professional travel, business travel, then we are okay with it. But if it is for personal nature, then we will disallow it. Municipal taxes paid in respect of house property. So there might be some house property income also. Is it there? Yes. See, rent received. So we have a house property, we have a PGBP income, we have a house property income also. And these expenses, these municipal taxes are not related to your PGBP. This is related to your house property. So again, we know that we are not going to allow it here in PGBP. But yes, while computing your house property, we can deduct this amount from GAV. Correct? So these were the expenses. There is income, or yes, there is income. 928 net profit. Net profit should be the starting point while computing your PGBP. Okay. Then on the income side, they have given to us, this is the fees earned, audit fees, taxation fees, consulting fees. All is professional income, no problem. So this is PGBP. We have no issues with it. Dividend on shares of X Limited. You understand that dividend is IFOS income. So you have to take it out, whatever is there in the P&L account, please take it out while computing your PGBP. and take it to your IFOS, and it should be taken at the gross level. See here it is mentioned gross level, so there is we have saved a bit part on that mathematics portion. We don't have to do that mathematics. So we will take it away from here while computing PGBP, and we will take it to IFOS 10,524. And you understand, if dividend is there on shares and there is a section, if you remember the section number, we have section 194, dividend on shares. And it says that if the rate of tax would be 10%, if the threshold limit is more than 5,000 rupees of dividend. So here you are getting more than 5,000 rupees. And this is a gross amount, right? So you can easily calculate that 10% would have been the TDS on this amount, how much it would be. So it is a kind of hidden adjustment, right? It's a kind of hidden adjustment, but you should know this. Why? Because you are now concerned with TDS, TCS also. Why? Because examiner is asking not just the total income, they are asking not just the tax liability, they are asking tax payable. And as I have already mentioned to you, that tax payable, how you calculate your tax payable, you have to consider your TDS, TCS or advanced tax also, then this figure will come. So you should know if there is any TDS or TCS or any advanced tax in the question, you should consider that also, because you have to show that particular thing also in your solution. So how much would have been the TDS? It would have been 10%, and it's a gross amount which is given to us. Then this is simply, we can do 10% of this amount. How much it will be? It will be 1052, right? Okay, tell me what would have been the case if this would have been not gross, if this would have been net. So first of all, you have to do that mathematics. First of all, whatever this amount is, let's say this is equal to, if 10% TDS is deducted and if it is net, so we understand that this is the remaining amount, 90%. This is equal to 90%. So you have to do that mathematics. First, you have to calculate the gross amount. So how you will calculate the gross amount? Simply you can divide it by 90%. You can do this in your calculator very easily. Divide it by 90%, and then you will get your gross amount, so that you can apply your TDS also. You can calculate your TDS amount also. But right now we have this as a gross figure, so we can simply calculate 10% on this gross amount. Okay. Then we have income from UTI. Again, we have income in the last question also. There was income from UTI. So you understand that this is our IFOS income. This is not PGBP. So we will take it away from here while computing PGBP. And here also it is gross amount. We understand that there is a section, if you remember the section number, we have section 194K. It says that if you are receiving your income from mutual funds, UTI and all, then there is again same. The provisions are almost same like 194 dividend. It says that 10% TDS will be deducted if the amount is more than 5,000 rupees. So it is more than 5,000 rupees and it's a gross amount. So we can simply do the calculation. 10% TDS would have been deducted over here. How much it would be? 760 rupees. Right? This is a gross amount. Okay. Next income. Honorarium received from various institutions for valuation of answer paper. Is it PGBP income? No. So she has evaluated some answer paper. For that, she has received some money, honorarium. So this is our IFOS income. So we will take it out from here and we will take it to our IFOS income. Rent received from residential house property, it will go under house property computation. So this is it house property income, or it would be considered as GAV. If nothing is mentioned about municipal rent, expected rent and all, then this will be considered as your GAV. So from GAV we have municipal taxes also, I believe, of 3,000. Yes. So this will become your GAV, deduct 3,000 rupees, then 24A, 24B, as the case may be. 24A will always be there, 30% of NAV. You can check if there is any loan which is going on in this particular house, then you can claim 24B as well. Okay. So this is our income and expenditure account. Let's come to our other information. So first information says allowable rate of depreciation motor car is 15%. See, they have mentioned it, the rate is 15%. Even this would not have been there. We understand that we have to apply 15% depreciation rate because these guys have taken this, debited the entire amount of capital expenditure. It is not allowed, only the depreciation will be allowed. And there we can write an assumption that it's been used for less than 180 or more than 180. The assumption which you are taking, I'll take more than 180, 180 or more in fact. Then we will claim full depreciation. Value of benefits received from clients. Value of benefits received from clients during the course of profession is 10,500. Tell me what it is. Sir, this is PGBP income. Because when we read charging section 28 of PGBP, it mentions certain income, and one of the income there is if you received any benefits, if you received any perquisites, if you receive any gifts in the course of your business and profession, that becomes your PGBP income. See, if you receive gifts from your employer, it becomes salary income. If you receive gifts in the course of business and profession, it becomes PGBP income. If you receive gifts from others, your friends, relatives, and all, then although from relatives it is exempt, but from friends and all, it becomes IFOS. Correct? So gifts are there in three heads. It depends from whom you are receiving such gifts. So here it is in the course of your business and profession. So this income should be your PGBP income. And tell me whether the assessee has considered this income in their P&L account, in their income and expenditure account. No. So what we have to do is we will add this income while computing PGBP. So this should be our PGBP income. Third point, incentive to article assistants represent amount paid to two article clerks. So there was some incentive, and I have said to you that we can pay the incentives also. It is the kind of bonus which we are paying to our article assistants. Incentive to article assistant represent amount paid to two article assistant for passing CA intermediate examination at very first attempt. No issue with that. We can allow it. No problem. So this information is not that relevant for us, but yes, if the examiner has given some information to us, you have to ignore that. Because why? Because this is not that relevant, but you cannot simply 100% ignore it. Just give a one line note over there. Just give a one line note over there that why you are ignoring examiner's information, because you have to tell them that, sir, this information is not that relevant. That is the reason we have ignored it. Okay. Not a very big note, just a one-liner note in a simple plain English. Fourth point, repairs and maintenance of the car include 2,000 rupees. So there was repairs and maintenance also 4,000, right? Repairs and maintenance of car includes 2,000 rupees for the period from 1st October 23 to till 30th of September 2024. Okay, this is 1 year. 1st October till 30th September. Yes, it is 1 year, but actually the thing is that it belongs, some portion, 6 months belongs to our previous year and 6 months belongs to next previous year. Correct? See, we are doing previous year 23-24, and this particular period is of 1 year, but it comprises of 6 months of this particular year, which we are doing. And the issue is that it consists of 6 months related to previous year 24-25 also, right? 6 months. So we can say this 2,000 expenses which is related to car repair. So if we'll divide in 6 months, then we can simply divide it by 2. It would be 1,000 each, right? So the question here is that assessee has paid some prepaid expenses, whether that prepaid expenses is allowed or not. Very interesting point. So we have no issue with this one. This is debited. We have no issue with this one. This is also debited over there. But the question is whether it should be allowed or not. See, now that point comes into picture. If the assessee is maintaining their accounts on accrual basis, mercantile basis, then we know only the expenses which are due during the year can only be allowed. So if the assessee would have been, in this case, although they are not maintaining on mercantile basis, so if they would have been maintaining their accounts on accrual basis, mercantile basis, then we would not have allowed this one, because this is related to some other period, right? It's a prepaid expense. But here the point was the assessee was maintaining their accounts on cash basis. So we understand that whatever is paid during the year, we will allow that as an expense. So this information is also not that relevant for our computation. But yes, we have to give a small note over there, a one-liner, two-liner note in a simple English language. Just give a note over there that this is also, it is, although it relates to some other year, also 6 months expenses, but it will be allowed by as the assessee is maintaining their books of accounts on cash basis, right? I'll show all these notes to you also. Fifth point, salary includes 30,000 to a computer specialist in cash in cash they have paid salary. So we know that if you have paid more than 10,000 rupees in cash in a single day, then it is not allowed. If you remember the section number, you can quote the section number also. The section number is 40A3. So it says that if you are making a payment of more than 10,000 rupees, then it will not. Although there are certain exceptions, but this is not an exception. So it will not be allowed, right? So 30,000 rupees from salary. So there was some salary, right? Salary. From here, 30,000 rupees would not be allowed. Correct? Okay. Traveling expenses include expenditure incurred on foreign tour of 32,000. So traveling expenses include 32,000. That is for foreign tour, which was within the RBI norms. Okay. See, here it is not mentioned that whether it is for personal purpose or not. So we will assume it is for official purpose. So if the assessee has incurred certain expenses on official tour also, that to outside India, we have no issues with that. We have no issues with it. So that this information is also not that much relevant, because we don't have to do anything. It is already debited, and we will assume that it is just for not for personal purpose. It is for her official purpose. Correct? So it will be allowed. It is within RBI norms or not RBI norms, that doesn't matter. That is completely irrelevant, right? So we don't have to consider this amount in computation, but yes, we will simply give a note of one line. 7th point says, medical insurance premium on health of dependent brother. See, they are saying about 80D, but 80D would not be allowed under default regime. It will be allowed under only our optional scheme. Okay. Medical insurance premium on health of dependent brother and major son dependent on her amounts to rupees 5,000 and 10,000 respectively, paid in cash. First of all, medical premium should not be paid in cash. Health insurance should not be paid in cash. Cash, it is not allowed. Second thing, for dependent brother, it is not allowed, right? Even if, because brother doesn't come in that definition. For 80D, we can, to whom we can, for whom we can pay? We can pay for self, spouse, or dependent children. So dependent son, we can provide the 80D deduction for dependent son. But for here, the dependent brother would not be covered. Parents are covered, but not the dependent brother. So dependent son we can allow. Although this son is major son, but it's okay. He is dependent, so we can allow. But the point over here is that this is also paid in cash, so we are not going to allow this one also. So 80D deduction will not be available. Anyways, for dependent brother, we cannot allow. For dependent son, we could have allowed. But the point here is it is paid in cash. That is the reason we are not going to allow it. 8th point. She invested an amount of 10,000 in National Savings Certificate. So we understand this is ATC. So when you are following optional tax regime, then you can give ATC deduction of 10,000 rupees, not under default tax regime. She paid 70,000 rupees towards advance tax also. So what you will do of this amount, 70,000 rupees. So once you are done with your tax liability, deduct TDS. We have some TDS also, and also deduct advance tax of 70,000 rupees so that you can compute your tax payable, right? So this is our question. So how you will proceed? Same way. First, we will compute the total income, tax liability, tax payable as per default tax regime. Then we will compute as per optional tax regime, but we will not duplicate the answer. What we will do, we will take the GTI which we have computed as per default tax regime. We will take it in our optional tax regime, and if there is any difference in any of the head, we will adjust that difference. If there is no difference, then we will take it as it is, and then we will compute our tax liability. We will give deductions also under optional tax regime. Then we will compute the tax liability by following the slab rates, or if she has any special income. I didn't find any special income over here. There was no winning, right? It was in last question. No. There is no special income also. Then we can apply slab rates, and she is not a senior citizen, so the slab rate in optional scheme it would be 0.2.5 lakh and so on. Correct. So let's start with this question. You can pause the video here. Please attempt this question, and then you can cross check with my answer. Correct. Okay. Let's start. So I believe that you have completed this question also. You must have seen also. So first I have calculated the total income and tax payable of Ms. Purvi as per default tax regime. Assessment year is 24-25. So she has income. There was no salary incomes. There is house property income. There is PGBP and there is IFOS. And for PGBP, we can make a note. For house property, there is just 2 or 3 lines. So you can show it right here. So house property income, we have GAV, municipal taxes, NAV, 24A, 30% deduction. There was no 24B. No, there was no interest on loan and so this is our house property income. PGBP, we have made a note. For IFOS, we have dividend income from UTI and honorarium, and that too at a gross level, right? So 33,924 is our IFOS income, and there is, because we are computing by using our default tax regime, so there would be no 80C available. 80D was not available because it was paid in cash. 80C would not be available under default tax regime. So this is our total income. You can round it off and then you can compute. So there is no special income, so that you can easily compute your total income by applying the slab rates of default tax regime, 0 to 3 lakh, 3 lakh to 6 lakh and so on. So this is our tax, include your cess, this becomes your tax liability. Then from your tax liability, you have to see if there is any TDS, TCS or advanced tax. So there was some TDS and advanced tax also. I was running short of this short of space over here, so I have just compromised over here. So this is TDS under section 194. It was 1052. TDS under section 194K. Even if you don't remember this section number, it's okay. You can simply write TDS on UTI units, right? 760, and there was advance tax of 70,000. So your tax refundable here, actually you have paid extra tax. So your tax liability was 64,263 and you have paid some extra tax. So there would be a tax refundable. How much it is? 7549, or you can round it off to 7550. So this is tax refundable in this case. And under optional scheme, you can simply take the GTI. The GTI which you have calculated as per, no need to duplicate all these things. You can simply take the GTI which you have calculated under default regime, take it to your optional scheme also. And if there is any difference in any of the head. So in this case, there was no difference in house property. There was no difference in PGBP. So our GTI as per optional and our default tax regime will be same. So it would be same. So this I have mentioned that there is no difference as such. And there would be, so this will become the GTI as per optional scheme also. And we have a deduction 80C, which is available under optional scheme, 10,000. This becomes our total income. We have rounded it off. And then, although there was no special income, so we can easily apply slab rate on the entire income. So this is our tax plus cess. This becomes our tax liability. And again, TDS, TCS, advanced tax we've already discussed. This is tax payable. This is tax payable now. And in default regime, it was tax refundable. So you understand that our the optimum regime would be not with it is not optional regime. It should be default tax regime, because there we are getting some amount back, and here we have to pay 45,000 rupees. So I've given it as an advice that it is advised that assessee should opt for default tax regime, right? And there are the notes which I have mentioned it over here. One is PGBP. You understand how we have calculated it. And yes, because there were some information which is given by the examiner. There was some information which is given by the examiner, and we have not considered that information in our computation. So we have to simply tell the examiner why we have ignored your information. So here I have mentioned that incentive to article clerk assistance is allowed. Prepaid expenses, although because now we are following cash basis of accounting, so that is the reason we have allowed those prepaid expenses also. Traveling expenses are assumed to be of business purpose, and medical insurance of brother is not allowed. Even if that person is dependent, then also medical insurance is not allowed. And for dependents, and it could have been allowed, but because it is paid in cash, that is the reason we are not going to allow 80D for this particular question. Right. So I believe that you are able to understand both these questions. So we are keeping, I'm keeping this video till here, and I'll be posting more questions on total income and other heads income. Please tell me how you are finding this video. This is very important for me, how you are finding this video. And if you want something else, any other question or any other point or any other concept that needs to be discussed, please let me know by writing a comment in this video, so that I can able to take that as well. Right. So let's meet in our next class. Also, I would request you to please share this video with your friends. Please do share this video with your friends. Okay, till then, bye bye and take care.